Welcome back to We Are Cosmic. If you are new here, this channel is all about understanding money, crypto, and the real financial system in a way that actually makes sense. No hype, no fake promises, just clear thinking, long-term vision, and real strategy. Today's video is very important, especially if you are feeling tired, confused, or even frustrated with XRP and the broader crypto market. Let me start with a very clear statement. When XRP moves, it will not move slowly. It will move fast and aggressively. I don't claim to know the exact date or the exact candle. Anyone who gives you dates is selling you hope, not knowledge. But what I do know, and I'm willing to say this publicly, is that XRP has a history of explosive moves after long periods of silence. This is not opinion. This is data, structure, and market behavior. Many of you watching right now are long-term holders. Some of you bought early, some of you bought high, some of you are down and asking yourself a hard question, did I make a mistake? If you are feeling bearish, if you are losing faith, or if the noise on social media is getting to your head, this video is for you. I want you to slow down, take a deep breath, and actually listen. In today's video, I'm going to break down clips from what I personally believe is one of the best XRP-focused interviews I have seen in many years. This is not retail hype. These are leaders. These are people sitting inside institutions, people who understand capital markets, financial infrastructure, ETFs, and long-term adoption. And more importantly, they are not talking about price predictions. They are talking about use case, structure, and staying power. Let me be very transparent with you. XRP is not just another coin to me. I've been holding it for a very long time. It has been life-changing for my family, and it is my #1 holding, both personally and professionally. I always share what I do. I don't hide allocations. I don't gatekeep. But understand this clearly. You should never copy anyone blindly. Your job is not to follow me. Your job is to understand why something matters. Over the next 10 years, I strongly believe Ripple and XRP will be one of the most disruptive forces in modern finance. Not just in crypto, but in the entire financial system. Opportunities like this do not come often. Our kids may not get this chance. Our grandkids may not either. This is not about getting rich quick. This is about being positioned early in a massive shift that most people still do not understand. But here is the hard truth, and I need you to hear this clearly. You must be willing to watch paint dry. You must be patient. You must survive boredom, doubt, and negative sentiment. Most people lose not because they are wrong, but because they quit too early. They chase price predictions. They chase opium. They jump from narrative to narrative. That is how money is transferred from the impatient to the patient. On this channel, we don't do that. We build plans, we stick to them, we focus on fundamentals, adoption, regulation, and real-world integration. XRP is not trying to be a meme, it is trying to be infrastructure, and infrastructure does not move fast until it does. There was a tweet shared by a well-known chart analyst that explained this perfectly. The message was simple. If you believe price follows law and structure, then XRP's historical behavior is fast and aggressive. We have already seen this multiple times in the past. XRP does not grind up slowly. It compresses, it builds pressure, and when conditions align, it explodes. Think back to major macro or political events. When Trump was elected, XRP did not politely move up. It shot up. That is how this asset behaves. Long boredom, then sudden expansion. Most retail investors get shaken out during the boredom phase. They sell right before the move, then they buy back higher emotionally when headlines change. This cycle repeats every time. Now let's add an important layer most people ignore: regulation and legal clarity. XRP has been under a cloud for years, not because the technology was weak, but because uncertainty scared institutions. Capital hates uncertainty, but that is changing. There is serious discussion around regulatory clarity, including frameworks like the Clarity Act, which aims to define how digital assets like XRP are classified under US law. Why does this matter so much? Because once classification becomes clear, the biggest excuse institutions had disappears. Legal clarity unlocks adoption. Adoption unlocks capital. And capital does not move like retail money. It moves fast, large, and with conviction. This is where my background in banking matters. I'm not saying this to sound important. I'm saying this because I understand how financial institutions think. Banks do not chase hype. They care about efficiency, liquidity, compliance, and settlement speed. XRP checks these boxes better than almost any digital asset out there. XRP is not just a token, it is part of a system designed to move value. Cross-border payments, liquidity management, real-time settlement, these are not buzzwords. These are trillion-dollar problems. And XRP was built specifically to solve them. This is why I say XRP is one of the most disruptive technologies in financial services. Not someday, already. You don't need every bank in the world to use it for it to matter. You need enough adoption in the right places. Once that happens, the network effect takes over. Now here's where most people get it wrong. They look at price today and assume the market has decided XRP's future. That is backwards. Markets often price assets incorrectly before adoption is visible. By the time everyone agrees XRP is real, the price will not be cheap anymore. This is also why emotional investing fails. If you stare at short-term charts, you will feel pain. XRP tests patience. It tests conviction. It forces you to think long-term, and that is exactly why it creates asymmetric opportunity. Most people are not built for this type of holding. Let me be very clear. I am not telling you to blindly buy. I am telling you to understand what you own. If you believe XRP is just another altcoin, you will not hold it long enough. If you understand it as financial infrastructure, your behavior changes. This is the foundation for everything else we're about to discuss. Institutions, ETFs, advisors, utility, adoption. None of that matters if you don't first understand why XRP moves the way it does. One of the most powerful moments in the interview I referenced comes from leaders who are not talking to Twitter or YouTube traders. Their audience is financial advisors. These are the people who manage money for families, businesses, and retirement accounts. These advisors are conservative by nature. They don't chase memes. They don't gamble. Their first question is always simple. Is this thing real, and will it still be here in the future? And this is exactly where XRP shines. XRP is often described as one of the Mount Rushmore assets in crypto. That means it is not new, not experimental, and not untested. It has survived multiple market cycles, regulatory attacks, bear markets, and extreme public criticism. Yet it is still here, still building, and still integrating into real financial systems. For advisors, that matters more than hype or short-term price action. Think about traditional investing for a moment. Warren Buffett-style investors don't look for the flashiest asset. They look for strong fundamentals at a fair price. In every major technological shift, a few dominant players emerge. In automobiles, in the internet era, and now in digital finance. Crypto will be no different. There will be a small group of assets that form the backbone of the system. Many professionals now see that group as Bitcoin, XRP, Ethereum, and Solana. You don't need to love all of them. But ignoring them completely is no longer responsible portfolio management. That shift in thinking is already happening behind the scenes. What really stood out in the interview was how advisors view XRP's staying power. Many advisors still question whether crypto as a whole will survive. But XRP, because of its long track record, its legal progress, and its real-world use cases, gives them confidence. Confidence that it won't disappear. Confidence that it won't be replaced overnight. Confidence that it fits into a long-term strategy. Another key reason advisors understand XRP is simplicity of use case. They understand payments, they understand liquidity, they understand stable coins, they understand cross-border settlement. XRP does not require them to learn a completely new financial philosophy. It improves systems they already know. This is extremely important. Advisors don't want complexity. They want tools that solve real problems. When they hear about Ripple working with banks, exploring bank charters, launching stablecoins, and integrating tokenized assets, it clicks. They can explain this to clients. That is rare in crypto. Now let's talk about ETFs, because this is another major signal. In the ETF world, it is very uncommon for multiple providers to see strong interest in the same asset at the same time. Usually, one product dominates early demand, but XRP is different. Multiple ETF providers are seeing inflows. What does that tell us? It tells us XRP appeals to multiple groups at once: retail investors, crypto native users, financial advisors, and institutions. That kind of broad appeal is rare, especially this early in adoption. This is not driven by price speculation alone. It is driven by understanding. Advisors see XRP as something that fits into portfolios without requiring constant explanation or defense. It is not dependent on the next narrative cycle. It stands on structure. This is why I keep saying institutions are coming, but not loudly. They move quietly. They allocate slowly. And then, when conviction is high, they move size. By the time headlines confirm it, positioning is already done. There has been a lot of debate about the 4-year cycle driven by Bitcoin halving events. I still believe that cycle exists. Mining activity, liquidity flow, and market psychology still matter. But each cycle, the impact becomes weaker. The peaks are less extreme, and the crashes are less violent. This is normal market maturation. However, XRP is in a very unique position. My belief, and this is based on structure, not hype, is that XRP has a strong chance to partially decouple from the traditional crypto cycle between 2026 and 2030. Not completely, but enough to matter. The reason is simple. Utility creates its own demand. Most crypto assets rely on narratives. When narratives die, price dies. XRP relies on infrastructure usage. When infrastructure usage grows, demand grows regardless of market sentiment. That is a massive difference. We are already seeing early signs of this. During periods where the broader crypto market is weak, XRP has continued to see consistent inflows. It has held up better than many assets that are supposedly hotter or more exciting. That is not accidental. That is adoption beginning to show up in price behavior. Now, let's talk about ETFs again, because this is where the signal becomes very strong. Launching an ETF is hard. Getting attention is harder. And getting significant assets under management quickly is extremely rare. Yet, XRP-focused products have seen numbers that most ETF managers would consider a massive success. To put this into perspective, many ETFs are considered winners if they reach a few $1 million in assets after a full year. XRP products crossed hundreds of millions in a very short time. That does not happen unless there is serious demand, not retail hype, real demand. Why is that demand there? Because Wall Street understands what is being built on the XRP ledger. They see advancements in stablecoins, tokenized assets, and settlement infrastructure. These are not experiments. These are foundational layers for the next financial system. The XRP ledger is fast, cheap, and reliable. That matters when you are moving large amounts of capital. Institutions care about finality, they care about uptime, they care about cost, and they care about regulation. XRP checks those boxes better than most. Another important point is timing. If Bitcoin truly peaked earlier in the cycle, as some believe, and the broader market enters a longer consolidation or bear phase, history tells us most altcoins will suffer, but assets with real adoption can behave differently. XRP could see strength during periods where others are weak. This would confuse retail investors because it breaks the pattern they are used to. People will ask, why is XRP moving when everything else is down? And by the time they realize why, the move may already be advanced. This is also where patience becomes your biggest edge. Decoupling does not happen overnight. It happens slowly, then suddenly. You don't wake up one day and see a headline saying XRP has decoupled. You see it in price resilience, inflows, and institutional behavior over time. Utility-driven assets mature differently. They don't need constant excitement, they need integration. And once integration reaches a certain level, price follows demand, not sentiment. One of the most misunderstood things about the XRP ledger is this. It is not just being used as a database. Any company can use a database. That is not special. What makes the XRP ledger different is that it is being used as active financial infrastructure. That means real assets are moving, settling, and finalizing on-chain. This distinction is critical. When financial institutions use the ledger, they are not simply recording balances, they are actually using it to move value. That includes payments, settlement of assets, liquidity transfers, and increasingly stablecoins and tokenized real-world assets. This is where XRP's purpose becomes very clear. Most blockchains struggle with one thing, doing many things at once while staying fast, cheap, and reliable. The XRP ledger was designed from day one to handle financial transactions at scale. Speed matters. Cost matters. Finality matters. If you are settling transactions worth millions or billions, you cannot afford uncertainty. This is why institutions are comfortable building on it. Another major point David highlighted is retail adoption and how it follows institutions, not the other way around. Right now, most retail users in crypto are either technology enthusiasts or high-risk traders. That is not how mass adoption happens. Mass adoption happens when people use financial products without even knowing they are using blockchain. Think about how you use the internet today. You don't think about TCP/IP, you don't think about servers, you just use apps. The same thing will happen with blockchain. People will swipe a card, send money, or invest, and never realize that settlement is happening on distributed ledger technology. Stablecoins are a perfect example of this transition. Every major bank will eventually have one, not because it is trendy, but because it is efficient. And many of these stablecoins will settle on infrastructure like the XRP ledger. That creates consistent, non-speculative demand. We are already seeing early proof of this. Hundreds of thousands of new wallets have been created through applications built on the ledger. This is not hype-driven adoption. This is product-driven adoption. Institutional usage creates trust. Trust creates retail growth. This is how networks scale. Another important idea mentioned was that XRP and Ripple are not trying to take over the world through gambling or speculation. That phase of crypto brought attention, but it is not sustainable. The future belongs to solid financial products, tokenized money market funds, treasuries, cross-border payments, and compliant digital assets. When you step back and look at this, the vision becomes clear. Ripple is positioning itself to become one of the largest financial technology companies in the world, not by replacing banks overnight, but by becoming the rails they use. This is why I say XRP is not competing with your favorite meme coin or short-term trade. It is competing with legacy financial infrastructure. And that is a much bigger game. As institutional activity grows, retail adoption follows naturally. Over the next 1 to 2 years, this dynamic is likely to accelerate. And when that happens, price becomes a secondary effect, not the main driver. We are living in a time where money itself is changing. It's not that things are simply getting more expensive. The real issue is that your currency is losing purchasing power. Inflation quietly steals value every year. If you are earning 6 to 8% and inflation is higher than that, you are not winning. You are slowly falling behind. This is why I keep saying cash is not safe. Cash is convenient, but it is not protection. Your job is not just to earn money. Your job is to preserve and grow purchasing power over time. That means owning assets that can beat inflation. This is where long-term investing comes in. Warren Buffett's style investing is not about excitement. It's about patience, discipline, and compounding. You create cash flow, you move that cash flow into assets, and you give those assets enough time to grow. You don't chase tops. You don't panic during bottoms. XRP fits into this framework not as a lottery ticket, but as a strategic asset. It sits at the intersection of finance, technology, and regulation. As the world moves towards stablecoins, tokenized assets, and digital settlement, the rails matter more than the apps built on top of them. In the future, most people will not even realize they are using blockchain. They will swipe a card, send money, or invest, and the settlement will happen on distributed ledgers in the background. Every bank will have a stablecoin. Every major institution will use blockchain rails. And very few assets are positioned as well as XRP for that role. This transition will not be smooth. There will be volatility. There will be fear. There will be moments where the market feels broken. That is normal. Big changes always come with pain before clarity. Here's something most people don't want to hear. The wealth gap is going to widen. The rich understand systems. The middle class relies on wages. The poor rely on debt. Inflation makes this worse. Over time, owning productive and scarce assets becomes the only way to stay ahead. That's why education matters more than ever. Not stimulus checks, not hope, financial literacy, understanding how money flows, how assets grow, and how cycles repeat. Your goal should be simple. Create cash flow. Move that cash flow into assets that you believe will survive and grow over decades. Protect what you build. Use leverage carefully when opportunities appear. And most importantly, be patient. XRP may not move tomorrow, it may not move next month, but history shows that when it moves fast. And when infrastructure adoption reaches a tipping point, price follows demand, not emotion. I'll leave you with this. The people who win in the long run are not the loudest, they are the most disciplined. They don't chase hype. They don't need constant validation. They understand what they own, and they are willing to wait. If you've made it this far, you're already thinking differently, and that alone puts you ahead of most people. This is We Are Cosmic. Stay patient, stay curious, and stay focused on the bigger picture.